Hello, this is Witchell. Welcome to a free class edition of Trading the Markets. Today we're going to talk about a bunch of different things, what's going on in the market, as well as how to be a more consistent trader. So let me see where's that article right here? All right. So right here, this came out yesterday. So they announced a surplus of oil cuts. So they're gonna start cutting oil, and oil could jump $10 a barrel. I don't know if you remember before, like when the wars first started, when oil went crazy. At one point, oil was like 120, $130 a
Wow.
barrel.
Oh, wow.
Yeah, that's how crazy it was. I was making a lot of money off of oil, just playing MRO and oil
Mhm.
stocks before I even found rig. And basically this should help oil to start growing. But the thing is that we know it's coming, but we don't know when, and we can't
Uh-huh.
just act like that. We gotta really watch it and come up
Okay.
with a plan, and then and then enter it and then play it. But
Okay.
I would definitely recommend swing trade, putting time on it, if you plan to trade oil.
Okay.
But
So,
yeah, you had a question? Oh.
okay. So basic, like trade tomorrow.
Yeah, MRO is one. Rig is another. I'm gonna get into the plays.
Okay.
But let me get into this. Where is it? Um, okay.
Sorry, my iPad froze. So if I log out, I'm gonna log back in.
No doubt, no doubt, no doubt.
Okay.
So, where should I start? All right, so right here. So I remember I spoke about this before, a while ago, trading budget.
Mhm.
So people want to trade any and everything. Like, let me trade Microsoft. Oh, I want to trade Avivibe. I want to trade Nvidia. I want to like these are big blue chip names, and to buy in the money is going to cost you hundreds, not thousands, to buy in
Mm.
the money. You know what I
Wow.
mean?
Okay.
So why trade that for when you're paying hundreds and thousands to buy in the money to basically get a good position
Hmm.
when you could pay 50, $100, $30 and be in the money? It's possible. So it's all about getting the most bang for your buck. So you have to trade your budget depending on how much money you have. So
Hmm.
if this is a stock that has the implied volatility of 50%, and like you know what I mean by implied volatility?
Uh, I think I forgot what that meant.
All right, let's go to Robinhood. I've been to Robinhood. Let me go to Robinhood real quick. Let's see. I think I'm gonna start using Robinhood more just to like make it simpler for people to
Okay.
just think it's so confusing.
Hmm.
Like for the more advanced.
Yeah, it definitely is for me.
Mhm. Logged into this in a while. Sent you a text. Yeah, I got it. 794-766. All right. So let's look at MRO,
Okay.
Marathon Oil. Okay, I guess they got new stuff on new charts. Okay, I don't. Yeah, haven't been on this in a while. But so now let's say I want to trade their options, right? So now let's say I wanted to trade this week, like 3 days from now, it's expiring, right? Because
Uh-huh.
like you see the percent change right here.
Yes.
That's how much the options went up today. Today.
Mm.
Yeah, ridiculous. So you see it's up 3,000%. That means yesterday it was like $6 or something. Like it was $3.
Wow.
It was like $3. No, not yesterday, Friday. Friday, this was like $3.
That's
Yeah,
crazy.
it is crazy. And that's the power of options. But the thing is that you could never time this.
Mm-hmm.
So it's not about timing the market, it's about
Uh-huh.
spending time in the market so that you're already in the market, already aware of this, and then
Uh-huh.
putting yourself enough time to reap all the benefits that come along the way.
So you thinking it's gonna go up more?
Yeah, but we gotta watch to see if it's because it already ran up, so I'm expecting it to pull
Mm-hmm.
back. You know what I mean? I'm expecting it to
Okay.
pull back and to give me a better entry, or maybe
Uh-huh.
it'll just shoot up. But either way, I'm not gonna hop in yet. I'm gonna wait because whenever I enter, I have to enter in the best possible way for myself. You know what I mean?
Yeah.
Yeah. So this is MRO today, but now look at implied volatility. So now when I click on this, this is the 26.25 put. Notice the price is 26.45. So this is basically at the money slash in the money.
Mm-hmm.
But notice right here, implied volatility. You see how it says 45%?
Mm-hmm.
Every single option has an implied volatility. If I come over here, implied volatility 46.3%. You know what I mean? The closer expiration, the higher usually it is. Because if I go out, let's say I go out 2 weeks and I go similar option, look how the implied volatility is lower.
Mm-hmm.
So implied volatility is how much it could swing. So
Gotcha.
because it's short term and because things are hot right now, implied
It's a,
volatility is high. People are like, oh, this could go to the moon tomorrow. Who knows? Like, but that's gassing up the price. You know what I
mm-hmm.
mean? It
Okay.
basically just gasses it, you know. So now that's implied volatility. So now here's what I'm saying. When you pick a stock that has implied volatility 50% or less, you know. So
Okay.
like see your spies, your MROs. There's a
Mm-hmm.
lot of stocks that don't move that crazy, but there's a lot of stocks that do move a lot crazy. That if you're gonna trade them, you're gonna pick cheaper stocks. So basically, um, less than 50% portfolio. The main thing is like it has to be less than 50% implied volatility. Five, and then you want to risk 5 to 15% per trade, 1 to 5% per contract. So number wise is this. Let's say you have $500 budget. You're gonna stick that to stocks that are $25 or less. You understand? You're not gonna
Okay.
go after Tesla. You're not gonna go after Amazon. You're not looking at none of these because you do not have the budget for it. You have
Right.
to trade within your budget. So now this is when you're looking at your Fords, your rigs, your MROs, because our MROs are about $25. You know what I mean? So these are stocks within your budget that you can trade. To look at anything above is just a waste of your time because now you're just flipping a coin. But you can actually get a good bet, a good position where less needs to happen for you to make
Mm-hmm.
money.
Gotcha.
So, yeah, so that's that. So then I wanted to talk about oh yeah, the trade that I made. So let's compare. So let's compare different options so you can see what I'm talking about. And um okay, so all right, so this I'm just gonna focus on number one. Number one. So you see, can you read number one?
Okay. Check the ticker for volume.
Mm-hmm.
A, before you chart, make sure there's adequate OI
Open
and
open interest.
open interest and volume. Tight bid slash ask spread. Make sure the Greeks look good.
Yeah. So this is a checklist you need to do before you buy any option because before you even look
Mm-hmm.
at the chart, look at the option chain because if it's not liquid, it doesn't matter how good the chart is, we're not trading.
Mm-hmm.
So so
So
go ahead.
when it says check the ticker for the volume is the open interest. That's the part you're talking about.
So volume and open interest are two different things. But when I
Mm-hmm.
say volume, I mean I want to make sure that it's heavily traded. You know what
Mm-hmm.
I'm saying? Like I don't
But
want it to
how?
be like a stock nobody knows about that
Yeah.
barely people touch. I want it to be a stock there's a lot of volume, a lot of shares are being traded.
Okay.
You know
So
what I
how
mean?
would you check the volume?
Oh, so it says it. So okay, so like for example, let's say you click on any stock like MRO. So
Mm-hmm.
it should say it. It doesn't say it. Hold on.
Now I know on
Should say how
TD
many shares are
Ameritrade.
traded. I don't see it here. Maybe on. I mean, all right. So let's say it doesn't. Okay, Mark. No, it doesn't say it. I thought it.
You talking
It
about
used
like
to
at
say.
on TD Ameritrade where like at the bottom it have the higher like the volume is like some. candlesticks are high, some are low. Which is that the part I will be looking
No. It's
at?
the overall volume of how many shares are traded per day.
Okay, gotcha.
But here's the thing. It starts there, but it's really all about the contract that you're specifically trading. So
Mm-hmm.
so it doesn't say right here, but you want something that's trading millions of shares per day, just millions, right?
Mm-hmm.
And then mainly the volume and the open interest from the contract. So back to this contract, you see the volume
Okay.
3,700. That's how many contracts were traded today. 3,000
Okay.
people bought and sold contracts. The open interest is how many people are still holding them. There's 25 people that are still holding contracts.
Wow.
Does that make
Mm.
sense?
Mm-hmm. Yeah.
So really you want these to be in the hundreds. You
Oh,
at least in the hundreds to thousands.
which one? The open interest as well?
I would say both, but to
Mm-hmm.
average between them. Average.
Okay.
You want the average between them to be at least be in the hundreds. And if you average both of them, it's going to be at least in the hundreds. You know what I mean?
Excuse.
It's
Okay.
actually if you average it, it's still in the thousands. But because the main thing is there needs to be enough volume. There needs to be enough interest in the
Mm-hmm.
instrument you're trying to buy. You know what I mean?
Yeah.
Otherwise, it's not worth buying it. If nobody's buying it, I'm not trying to be the first one.
Okay.
You don't want to be the first buyer or the first seller. You want to buy into strength.
Yeah.
you want to make sure that there's interest and there's a high level of activity. So volume of interest is going to be is what you need. But the easiest way to just know is look at the bid and ask spread. Yeah.
Okay.
Oh, somebody's trying to enter. Yeah, it's the bid and ask spread because as you can see, the bid is 34
Mm-hmm.
and the ask is 36.
Mm-hmm.
So the market's 35. So you see how tight they are?
Yeah.
That's how you know it's liquid.
Because they're all close. Like the numbers are close.
Hmm.
Okay.
And you got to understand that the only reason why they're close together is because there's enough volume and there was
Mm-hmm.
enough open interest to facilitate the trades to make it
Okay.
close so that people could easily get in and out.
Okay.
Yeah, so here's what you want to look at before you look at any option. Well,
Mm-hmm.
make sure these numbers is close.
Okay.
This is not too high. If it's too high, it might be out of your budget or out of your league. And then these are at least in the hundreds, average in the hundreds between them. But these are gonna be good as long as these are good. Everything else is good. As long as you
Okay.
get a good bid and ask spread, then that means there's enough activity to make it that close. That means
So
there's
as
a
long
lot
as
of buyers and there's a lot of motivated sellers on both sides.
okay.
So that's why like when you go to random options, you don't want to trade random option, no name you haven't heard about stocks, because
Mm-hmm.
yeah, the options might be cheap, but if you see an option like, this is a bad ticker. I'm just gonna type something random, see what pops up. Hopefully it's a bad company. I don't know. Jinko Solar. Let's see how their options are. So like, let's say you want to evaluate an option chain. See, are these options good? Okay. So I click here. Now I look. How's the spread? 85, 105. The
Mm-hmm.
middle is 95. Oh, I'm still trying to get in. Remember I told you you don't want the spread to be more than 20%.
Okay. And that's too far.
Well,
And
20%.
yeah.
If you call this 100 and you call this 80, that's 20%.
Mm-hmm.
So
So
it's within the edges of the confines. You know what I mean?
okay.
So that's the most. I won't go any less liquid than that. It's not the
Okay.
most liquid, but it's not the least. You know. So
Mm-hmm.
therefore it's just liquid enough.
Okay.
All right. Who that said probably. Um, so so that's how you would evaluate. And then look at the implied volatility, a little bit above 50, but at least it's not too far. But look at the volume, look at the open interest. They're not
Mm-hmm.
really. That's why I said it's not the best, but it's not the worst because
Okay.
these are not averaging the hundreds. So you could do better. You could do better. But that's just an example. You know what I mean? As far as like what I would go for. So now let's get into the plays and stuff. So hold on, where were we? All right, so yeah, so you understand the budget. Now let's talk actual plays. News events. Where is it? We have something on the news. Where is it? All right, right here. So, all right. You mind reading this?
Okay. The top one.
The bottom one.
Okay.
Bottom one.
The administration has made refilling the SPR a priority, but it has been hampered by factors that include maintenance at two of the reserve's four sites. Energy sector, Jennifer
Granholm.
Granholm has said that the government isn't able to release oil from the catch and uh, refill it at the same time. So an emergency sale would likely further delay any plans for replenishment.
Mm-hmm. So, and Bullards, and on the top one, Bullard says oil surge might make the Fed's job more difficult. So remember, it's all about inflation.
Mm-hmm.
Inflation has been going down, but it's kind of like slowly coming back a little bit. But you got to understand, one of the reasons why inflation went down is because oil prices went down. When them oil prices start going back up, so will inflation. And when inflation starts going back up, the Fed is going to have to keep raising rates. Everybody's talking about them pausing. You know, so then right here, OPEC basically the OPEC is the cartel. It's like Saudi Arabia, Venezuela, Brazil, the countries that are the biggest on oil. They have a cartel called OPEC, and they decide the price of oil every day. How much of the supply to let loose, how much of the demand to pull back. They decide how much oil is going to be circulated at all times. So when they are cutting production, what that's going to do is going to make the demand of oil go up. What that's going to do eventually make the price of oil go up. You know what I mean? So
Okay.
now, as far as play, so let me go to the charts. Um, First I'm gonna go to tomorrow. Oh, I see. All right. Oh yeah. All right. Before okay. Let's see. So MRO is one. Let's go. So if we're looking at MRO, we gotta look at from the top bottom approach. So you look at the monthly. Not every bar represents a month, but you see how it made a high of 36 and it came all the way down. And then since 2020, it's been on a tear. 2020, this was $3 stock. This was a stock that I got from BWO. I think I bought it at 7 on Robinhood, and then like I sold that like double it on my Robinhood, and then I bought it again, and I doubled again.
Because
Yeah,
you know what? I think with the BWO, I had purchased just one of the stocks, but I didn't know an option. That's what I ended up doing.
yeah, but it was still cool, you know, just getting these stocks on our radar. So now, so this is the MR on the month. This it's been coming down, but you see this right here. This is new this month. So now I'm gonna go into a closer time frame so you can understand. But you see right here, this is support because you see that we rejected the bottom down here. That means that right here is where all the buyers are, and they're holding the line. So now going to the weekly, I'm gonna get to the daily. I'm gonna really create a plan on how to attack this. So now, you know, you look at the weekly, you know, now you see like we broke out this week. We broke out from last week. We're already like taking back the 2 weeks of downturn that happened like 5 weeks ago. So this is a good sign, you know. So now and we could start looking at some targets. Like basically this area right here is a target that I had basically from before. because so this is an area where a lot of sellers are present. So this might be a target to take profit at. So now we go to the daily. You can see it more closely, and you see like we broke out from the channel, like the price was trading in here, broke out, came out. Now we're down here. Now we're bouncing back up. So what we got to look for is a place to enter. So if we pull back potentially we can enter somewhere around this black line, maybe lower. I want to see like because the thing you got to understand about price, once price goes in a direction, it has to retest the other direction. You don't know when, but it definitely has to retest it as much as possible. So for that reason, depending on how oil moves, this blue line is going to be resistance. Hard for us to get out, for us to get over it, but I want to see us come down to this $25 level to see if we can enter, because for all we know, we might fill this gap. Or if we don't fill the whole gap, 50% of it might get filled. So that's why I'm cautious. I'm waiting to enter because I want to see, do we come back to retest this level at least, or maybe this level. But for all we know, we might just gap up and keep going up. But once we break through this area, especially if we break through this red zone, it's really up from here. Like, because remember I said when you have like when you look to the left and you see there's not a lot of green and red candles, that's thin structure and they can easily get through it. You understand?
Okay.
So like because of all this red up here, if we can get through the red and green clumps and break through like this red area, we can really see a lot of upside. So that's how I'm looking at it. So I'm literally just waiting for something like this, kind of something like something like this, something like this, and then I'll take profit right here. That's basically how I want to enter. So if I was to, so now it's good for you to practice taking trades on the chart without actually taking the trade. So, but just by coming here and getting a position, and I'll get a long position, and I'll put it like this. I'll put it right on this line, and let's say I put my stop loss right at the gap. I would target all the way up here, and this would basically be my trade. And you see this trade, it's a 2.25 to 1 ratio. So whatever I'm risking, I can make at least double. So that's basically what I'm gonna. So now I'm just gonna wait and see if it happens, but I'm not gonna enter until I have a plan, because the whole thing is wherever it moves next, I need to use the structure to figure out where to put my stop loss and where to put my target and all that. So that's why it's important. So with that said, what we can do now, we can be, since I'm waiting for a comeback and I want to target this 28, I can look at the $28 calls and I can put time on it. So the time aspect is based off this line right here, the blue. This is the ATR. So it's letting me know that MRO is moving about $1 a day, but it also just spiked. Before that, it was moving like 90 cents a day. So now I can try to predict, okay, if it can move 90 cents in a day and we're at 26, to get to 28, we can do that in 3 days, 3-4 days. But since it's 3-4 days, now I'm going to multiply that by 5 and say 15 days. You know what I mean? Give me a cushion. So now I know to go 2-3 weeks out on my contracts to be safe. So now, like, so for example, go to Robinhood. Here's the contracts I would suggest. Go to MRO. Oh, come on. Go to trade options. And then I said 2-3 weeks out. So the April 21st, that's 2 weeks out. That's not a bad, date. I can even go 28 if I want to be extra safe. But now let's say I go to this right here. So now if I look for the $28 call, they're going for 33 bucks. And you see today they went up 433%.
Wow.
Yeah, they went up. Yeah, they 5x today. So that means that on Friday these were going for about $5.
Oh wow.
Yes, it's $6. Yeah.
Crazy.
Now they're 33. So this is why I love options, because where else can you get this? You wake up in money potentially. Because every day I woke up today and was in this play, woke up in money, you know? So so this is the option right here. And then furthermore, what I'll do what I would do is I would look back at the history to see what is its high, its low prices. See the low is 20 right here?
Mm-hmm.
Y'all says that? So
Yeah.
I would put it in order to try to get it at 20 to see if we pull back.
Okay.
You know what I mean? So,
Mm-hmm.
so now I know what price point to look for. I know I'm looking for the $28 calls expiring April 21st. Try to get them at $20 a piece, and I know I'll come up if I do that, most likely.
Okay.
You know, but
Okay.
aside from that, you already know rig is my number one. So I definitely gotta touch on that. Um,
Mm-hmm.
so hold on, where is it? I had a trade. Where is it? Did I change it? I think I'm probably exit out. All right. All right, I wanted to show you this trade, one of my old trades on the rig, and how much I need, how much things move for me to make the money that I made. Or is it Trader Sim? But I have my journal out again. This, where is it? It's weird. Oh, I think it's on the other side. Oh, here it is. All right. All right. So, all right, yeah. So you know my online journal. So this is a trade I took last month, or actually in January, the end of January, on rig. And as you see right here, I bought
Mm-hmm.
17 contracts. Hold on. 17 contracts, price of 200. So I invested a total of $223. My average fill price of all my contracts was $13. My average exit price of all my contracts was $44.
Mm-hmm.
So basically, I turned 223
Mm-hmm.
into 760. I made
Oh wow.
$538, which is 241%.
Mm-hmm.
But the cool thing is, notice the cool thing is that this was a swing trade, and at first it started working against me, but because I had time, it came back. So let me erase, annotate clear. So right, so notice right the date when I got in January 18th,
Mm-hmm.
at 8:44, and then I got out February 3rd at 10:26. And this was the trade that, if you notice, like, look, I bought some of them. I bought my first batch of 10 at 16. Like right here.
Mm-hmm.
Let me annotate. I bought my first 10 contracts at $16 a piece. That's why it cost me 160. And then I kept buying them at different prices.
Mm-hmm.
Like if you notice, I bought I just kept buying contracts. I bought some at 13, see 17,
Mm-hmm.
11, 7. Then I bought a bunch of them at 7. You see what I'm saying?
Mm-hmm.
So that's what brought my average price down, because at first my average price was 16, but as you can see,
Mm-hmm.
price became 13
Mm-hmm.
because I kept buying cheaper ones that averaged out the whole lot. So now, if you notice, like when I sold it, my last contract, I sold for 78 and I bought it for $7.
Mm-hmm.
So that last contract was 1100% gain on just
Mm-hmm.
on just that last one, because you can see some of them I sold for 70, I sold for 65, I sold two of them at 60. Mind you, my average price is 13. So this is why I made 241% on this trade. But here's the remarkable part. If you go on the chart and look at when I was in it. and how much it moved. So let's go to rig. Okay, so yeah, so between these two dates right here, let me go on like on 1 hour. See better. So as you can see right here, these two vertical lines, I got in Wednesday, January 18th. I got out Friday, February 3rd. So that's about 16 days. So what's cool, you can use this ruler tool, because right here, this purple dot, that's where I got in. And this purple circle right here, that's where I got out. I don't know if you see it.
Mm-hmm.
So you can use this ruler tool, measure your entry and your exit, and it'll give you information on everything. So like right here, I put it right here, and then it'll tell me, look, it took me 16 days, and the stock went up 19.16%. Did you see how much the option went up?
You see from.
Oh yeah, I gotta go on another screen. Right here, do you see it?
Mm-hmm.
So the stock went up 16%.
Mm-hmm.
My option went up 241%.
Yeah. Wow.
Yeah,
That's crazy.
and this is why with stock options, you can make more with less. So now let me go back to the chart. So yeah, and I can see, the amount of time it took me. So to me, that's why it was remarkable, because the whole time, look what happened after I got in, April. Dropped on me. But guess what?
Mm-hmm.
I got time.
Mm-hmm.
And look what
Cause you,
happened. It
cause
came
you
back
had
on
it far out. Mm-hmm.
me. And if I had more time, I could have made more money. But that's okay.
Mm.
That's okay. I'm satisfied.
Wow, that was good.
So imagine you have a busy schedule. This is how you trade.
Mm-hmm.
You don't have to look at it every day. Because what I did, I bought a contract with 3 weeks of time on it. And that's how I was able to hold it all this time. Almost a month. So learning but the only way I was able to do that was by looking at the bigger time frame. Like if I look on the weekly, like you know, I was like, because on the weekly I think it was like, you see, so imagine I seen this. Um Imagine seeing something like this replay. You see this. Oh no,
Mm-hmm.
one more. You see this. This is what I seen.
Okay.
So I'm like, nah, because we broke out from this level and we're continuing strong.
Mm. Okay.
So I knew that this can keep going, and I had to probably go on the monthly to really see what target this can go up to. Yeah, I was on the monthly. Yeah, I remember.
Mm.
Because you see how this red bar right here?
Yes.
I'm like, we can at least come back up there.
Mm. Okay.
That's how I had my target. And then that's how I was able to, capitalize. And
Wow, that was good.
you look at where I got out, right there. You see that the purple dot right
Yeah.
there? Where I got out. So I knew that would have been a decent target, and that's basically how I executed on it. So now moving forward though with rig, let's
Mm-hmm.
go to like let's go to like recent action, because I do want to play rig, but I'm gonna same thing with MRO, play it the same way. Just be patient. Oh, let me cut this replay. Hold on. Yes, I did that. All right. So look what happened. And the thing about it, like we're on a daily, but look at how it respects my lines. I drew this line, when this happened. That's when I drew
Mm.
this
Okay.
green line. But look how
Okay.
all this happened, and it came back, respected that line, came
Mm-hmm.
back, rejected that line, mounted that line. You know what I mean? And then now we're sitting on top of it again.
Mm. Okay.
But this hammer is a hint. I mean, I'm sorry, this candle is a hammer.
Mm-hmm.
So, do you know what's special about a hammer candle? What does a hammer candle mean about? What does it
Um,
represent
I
in the
always
fight?
think reverse. Is it reverse or no?
It is reversing. because the price was this was a big red candle all the way down here.
Mm-hmm.
So, but then it reversed. So all that momentum is going up. You see them?
So
You
it
see
may
what I mean?
continue up then.
So it can continue up. It can.
Okay.
But we're gonna. That's what we're gonna see. That's what I want to see. If we open up inside this range tomorrow, I might buy it. If we like go
Mhm.
inside this range right here, I'll probably
Okay.
with time, you know. But I like it because you see this red. Oh, hold on, my fault. You see the red line right here? That was resistance. It broke
Okay.
resistance, and what did it do? Retest.
Mm-hmm.
That's the entry signal. You know what I mean?
Mm-hmm. Mm-hmm.
But I wanted to get in right here. I don't want to get in right where it is right now. So that's what
And
I'm
yeah.
trying to see if I can get a better entry. But this was a key area. How do you know? Because look, this support was resistance right here. You see what I mean?
Mm-hmm.
Also resistance right here, right here, right here. So that's how I know it's a key level. It's
Okay.
reactive now and it was reactive back then.
Mm.
So now as far as rig, based off this, I see the ATR rig moves about 46 cents a day. I want to give it time, and I also want to give it time to go down before it goes up. So I want to target this right here, the 773. So I would give myself 2 weeks, 2 weeks to do it because I know I can do it in 2 days. So I would give myself 2 weeks. So I would buy these contracts, and then this will be the last thing. So go to rig, the options. Set 2 weeks, so it's April 21st. Give it some time, and then I could go for the $7 cost, $41. You see that?
Mhm.
$41 with a $7 call, and that's in the money. So if I go out the money, I could even get these for 21. But that's what I would get.
For
Either one of these.
41.
Yeah,
Okay.
but like I said, I would for a pullback. So you see with the low 31, I'm not getting
Mhm.
these at 41. I'm trying to get them at 31 or
Okay.
less. And that's how we do it. Same thing with this. Look at the low. 15. I'm not getting it for 21. I'm getting it for 15 or less. And
Okay.
that's how we make the money.
Mm.
Yeah. So hopefully it'll be like plus 166%. And then you'll already be in it.
Okay.
Yeah. So that's it for today. But we have paid classes on Wednesday, so I'll see you then.
Thank you. Class was awesome.
All right, thanks. Bye.
Bye bye.
Have a good night.
You too.
Thanks.